Ladies and gentlemen, good morning, good afternoon, and good evening, depending on what time of the day you are joining us. Welcome to the Citizen Exclusive with Mpoki Thompson. Today we are going to talk about the banking sector. The banking sector has entered a phase of competition and transformation. Digital banking continues to frame customer behavior as well as financial inclusion and growth within the sector. To explore these questions with me, I have the honor of having a conversation with the Managing Director of Absa Bank Tanzania, Mr. Obedi Laiser. Obedi, welcome to the Citizen Exclusive.
Thank you. My pleasure, Thompson. Thank you very much.
We've continued to celebrate Tanzania's financial sector, specifically the banking industry that continues to record massive profits. Speaking about Absa, Absa is one of the leading banks within the sector. You are the Managing Director, so you're in charge of steering the wheel. 3 years into your tenure, can you tell us, how would you define the 3 years of your leadership at the moment?
Yeah, thank you very much, Mpoki. I think time flies, indeed. It's been 3 years of my leadership at Absa Bank Tanzania. And I think if I reflect on the last 3 years, what would define the accomplishment really, and what am I very proud of, is the fact that I was given the responsibility to lead and create a very strong organization, but I think at the same time, more resilient organization. From the time that I started as a CEO to date, I think we've become even much, much better. And that is not only to say that we are not celebrating the financial performance that we've had over this period of time, because it's been quite significant in terms of that. I think you'll remember that we were able to reach 100 billion PBT, profit before tax, for the first time in the history of the bank. Sometimes 2 years back, I think we were able also to achieve a customer deposit balance of 1 trillion, which was quite a big milestone for us. But also a customer lending book of 1 trillion quite recently in 2025. But I think beyond the numbers, really, the impact has been phenomenal across the board. If I look at the customers that we've had, I think they continue to grow. The impact that we've had for our colleagues, in that period of time has been quite critical, with the number of leaders that have grown within the bank. So I think, for me, it's not only about the financial performance, but also, the resilience that we've created for the organization. The bank has continued to become much stronger. I think the people within the organization have continued to grow. But I think the impact that we have done across the business and the economy in Tanzania has continued to be much, much stronger in the last 3 years.
Okay, so you've said it goes beyond financial growth. And you've also been quoted saying that banking is a business of trust.
Yeah.
Now, when you speak about trust, it's not easy to quantify it.
Yeah.
What metrics are in place for Absa to measure the level of trust that your customers have within for the institution? And do you feel that it is genuine trust, or it's more of a perception?
Yeah, I think that's a good one. I agree with you that it's very difficult to measure trust. But I think there are indicators that you can use to measure whether customers, stakeholders, even colleagues within the organization continue to trust you. And for us, what we're looking at is, firstly, the growth that we've had, as I've just highlighted, in terms of the performance, because performance does not come from the air. It comes from client base that we have already been able to build. I talked about the profitability that we've achieved. I talked about the balance sheet, both on the deposit side. So the indicators that we use to measure trust, number one is, are we growing the customer base? And indeed we are growing. Number two, do we see more customers wanting to come and borrow from us? Yes, we've seen that in terms of growth in our customer lending. But I think more importantly, beyond customers and colleagues as well, we also look at how we are viewed externally by other stakeholders in terms of recognition that we've been able to achieve in terms of accolades and award. And I think I must say, in the last 2 to 3 years, especially 2024 and 2025, we were able to be recognized by multiple institutions from government and private sector in terms of the excellence that Absa Bank has been able to achieve across. We also look at our colleagues as well, because we engage with them internally. I think there are measures that we use to measure, employee engagement as well. We've seen that improving over the years. The interaction that we have with the community as well, because trust is not only coming from customers or colleagues, it has to come from the community. And I think we believe that the intersection that we've been able to play, Absa Bank and the communities in the last 3 years, it has been quite phenomenal. We've been able to connect with regions and district, and of course the bigger government as well. And I think if you put all of this together, it indicates a bank that is growing, a bank that continues to be trusted by multiple stakeholders in the country.
So we've highlighted the 100 billion shillings PBT that you managed to record in 2024, which could be indicative of the trust that the customers have for the institution. Now, let's talk about that. Oftentimes when I talk to industry leaders and in relation to the performance of the different companies that they lead, we look at the sustainability.
Yeah.
Let's talk about that. 100 billion PBT, the performance recorded almost 2 years ago. What are you looking forward to in the coming years? And what are some of the headwinds? Because you operate in an industry that is very volatile.
Yeah, I think that's a good one. As I've said initially, for me, it's not only about the financial performance that we've had. I think it's about how have we built an organization that is even more resilient to maintain that momentum going forward. So I think performance aside, the other thing that we've been focusing quite a bit in the last 3 years is to build the fundamentals of the bank. And when I talk about the fundamentals of the bank, I mean things like governance. Governance is quite critical to ensure that the performance that we've had continues to be with you, not in the next 5 years, but maybe beyond that, 100 years, 300 years from now. So governance is very important. And I think together with the team, we've been able to build the foundation to ensure that we continue to be more disciplined in terms of the regulatory requirement, processes and policy. But also I think the capabilities around execution excellence. I think the competitive nature of this industry would mean that we have to be excellent in the way we execute. Not only, the innovation side of things, but also from a project perspective. So we've built that culture to ensure that we continue to be very strong from an execution perspective. But I think the other one is really to continue to become client relevant. Client expectations are changing every day. I think you spoke about innovation, and there are many other aspects about client behavior that is changing. Are we agile enough to be able to cope with that, evolution on the client needs and expectation? I think we talk about culture as well, which is fundamental to any organization. A very good culture, supportive culture, that of course with the strategy will continue to ensure that you continue to perform and maintain that momentum. I think the last one, but not least, is really to ensure that you build a pipeline of leaders that will continue to be around and take over from the current leadership team that is here, because Absa as an organization has to outlive individuals. And I think, are we building that pipeline of leaders to be there 10 years from now and 20 years from now to continue the legacy and what we're doing? So I think if the fundamentals are, worked on, I think the performance is just an outcome. Mm-hmm. When you're good in governance, when you're good in terms of execution excellence, if you're building a very supportive and conducive culture, and if you're building a pipeline of leaders, I'm sure that performance will just be a byproduct of all of those fundamentals in the business.
Absolutely. Now, I want us to double click a bit on the culture perspective. Yeah. There's a business maxim that says culture eats strategy for breakfast. So that means that if you have good strategies, but the culture inherently within the institution does not move according to the pace, yeah, then it's bound to fail. Execution definitely will fail. Now, when it comes to Absa, we have a lot of local Tanzanians who are working for the institution, which is a plus. When we talk about the competence levels, back in the days, people would question whether Tanzanians are able to deliver. Yeah. But today, we're speaking of a different terrain. But now, honestly speaking, when it comes to the delivery perspective, when it comes to execution and also accountability, explain to us about that. How does culture now fit into the broader strategies that you have? And if the bank is to fail, how will accountability be executed as well?
Yeah, it's a very good topic, Mpoki. For me, I agree with you. I think culture is extremely important because, in business, there is the what, which is your strategy. What are you planning to do? How do you look at the market, customer, and all of that? I think in most cases, that is easier to define, easier to craft. But I think on the other side, you need the how. And the how defines the culture. Within the organization, your mindset, your perceptions, your views, and all of that. So I think culture is very important. And I think at Absa, that's one thing that we are focusing on quite deliberately, especially in the last few years, because we realize, good strategy, any organization can write a very good strategy nowadays, of course. With the help of AI and many other consultancy, you can do that quite easily. But I think the most important thing is now, how do you implement that strategy? That comes down to culture. On a daily basis, as you engage with customers, as you engage with colleagues within the organization, what kind of traits do you view as the most important one to be able to support the execution of that strategy? And I think that's where, organizations win and lose from a culture perspective. Because if the culture is not supportive, on the strategy and the ambition and the aspiration, obviously that will be a very difficult thing to do. So from a cultural perspective, there are different facets you can look at it. There are organizations that are increasingly more internally focused. I think the demand and the expectation of the market and the competitive nature of this industry demand that you are client focused. Yeah. You always ask the question, what does the client want? What do they expect? And you work within the organization to ensure that you can solution for that. That is also culture, because if you don't view it that way, as I said, culture is about mindset. What is important, how we view it, and how do we go about solutioning for all of that. So I think culture is extremely important. We're focusing on that at Absa. It's about the customer, number one. That's the center of everything that we do. And obviously, internally, as we discuss and debate, that is always the number one priority, to ensure that customer always comes first, and we need to continue to talk about it more increasingly.
Okay, now let's go back to the profitability. Again, when people look at the banking industry, oftentimes it is viewed as a very lucrative industry. And it is so, because we're talking about over 2 trillion in profit that was made the entire financial year 2025. And we talked about your performance in 2024. But increasingly so, we are seeing a rising contribution from non-funded income. Mm-hmm. So that's non-interest income. But till to date, majority of the profitability comes from interest income. Can you give us a bit of insights into Absa's performance as far as interest and non-interest income is concerned? And what do you think will be the future of the vast pool of revenue generation for your bank?
Yeah, thank you very much. I think strategically speaking, both are important in my view. And I think for a country like Tanzania, the lending side of banking business will continue to be critical, because this is a developing country. The financial inclusion is not yet at the right level, and therefore supporting businesses and communities from a balance sheet perspective will continue to be a focus area for banks. On the other hand, we need to create, an organization like what we're doing in Absa that is a bit balanced between, the balance sheet side of the equation, but also the non-funded income, because that gives you the resilience. It kind of immunizes you, because volatilities are there. In one year, you would find that maybe the FX environment, has had its own cycles, and therefore you can be impacted either positively or negatively. So if you are not insulated properly from a balance sheet perspective, you might find that you are impacted. Now, to create that stability and resilience in terms of performance, you need a balance, between the two. And Tanzania is still developing, as I've said, financial inclusion still on the lower side. But I think over the last few years, the Central Bank of Tanzania, the government of Tanzania has been doing quite a lot from a policy perspective to ensure that more and more Tanzanians can be brought into the banking sector. So the growth that we are seeing in banking, I think in my view, I attribute that to an improvement in the financial inclusion momentum in the country, because we're still on the lower side. We have other countries that, they have, a small population, but financial inclusion is on the higher side, like Botswana, for instance, doing very well just because, above 75% of their population are banked, yes. From a lending perspective, from a transactional banking perspective. In Tanzania, not yet. Obviously, mobile money has improved that in terms of financial inclusion, but in banking, we still have a huge pool in terms of the demographic to be able to save. And of course, using digital innovation and all the means that we're doing, agents banking, mobile lending, digital innovation, we continue to bring more and more people in the banking sector, and hence the growth that you're seeing in banking across the board, from the bigger banks, the mid-tier, but also the smaller one. It's just that, a lot more people are coming and a lot more businesses and people are transacting through banking, and hence the volumes.
So we've talked about a vast majority of Tanzanians who wish to access financial services. We're talking about growth, but affordability still remains a question.
Yeah.
And I remember during one of my conversations with the central bank governor, Tutuba, I raised that. We're talking about how interest income contributes the vast majority of banking revenue, of the profits, that directly translates to interest.
Yeah.
So if I am to access a loan from Absa, that means that there's going to be, and I'm using this as a hypothetical scenario, there's going to be a marginally higher charge when it comes to interest that goes to the bank. Now, let's look at the other side. Non-funded income.
Yeah.
If non-funded income increases, that means I, as a consumer or as a customer, I will feel the pinch when it comes to the charges, the fees and charges, the ATMs. So again, where does the customer lie? If it's interest income, the bank profits. If it's non-funded income, still the bank profits. How do you serve now the customer?
Yeah, Mpoki, either way, because we're here to ensure that we support the economy, number one. I think we've been entrusted by customers to hold their deposits, which is one of the significant trusts that we still hold so dear. Now, when you're entrusted with people's money, you need to ensure that you can take care of it, very well. I think the role of banking really is supposed to be in between savers and borrowers who have got a need for financing to be able to do their businesses. Now, there's a fiduciary responsibility that banks have been given by the public. Say, hold this money. It's kind of some form of a private capital, banks are given that huge responsibility to intermediate that capital from savers to borrowers. Now, as you do that, and for you to continue to be sustainable for the longer term, obviously, pricing plays a role because banks are there, they need to continue to do business. But I think over time, Poki, if you do an assessment in terms of the pricing that banks are charging, both on the loan, but also on the transaction side of things, if you take a view of the last 5, 6, 7 years, it's been improving on the downward trend. That's a conversation. You remember 7 years ago, loans used to be trending at 20%, 22% interest rate. Today, banks are issuing similar loans, bigger ticket size as you've seen in the market at 16, 15%. I'm not saying that 15, 16 is still low, maybe still high, and there's a lot more work that needs to be done. But I think if you take a trajectory of a number of years, the direction of it is that, it's coming down. And my sense of it is as we continue to bring more and more Tanzanian into the banking sector, banks continue to get more funding in terms of deposit to be able to intermediate and give loans to borrowers and business people, this rate will continue to go on the downward trajectory. I think the BOT is doing a fantastic job to ensure from a policy perspective to drive interest rate down. And one of the biggest impact why rates have gone down over the last 6, 7 years is because of that intervention from the government. So I think it's a journey. We are not yet there, but I think if you look at the journey that we are coming from, it gives you comfort, and of course, all of that comfort that, this pricing thing is going down. I think on the transactional banking perspective, again, it's been a similar trend, innovation, technology, AI, and how banks are going to use that to leverage in terms of how they're going to save the customers. That is also going to play a bigger role to ensure that we can make banking affordable to customers in the coming few years. So I think the trajectory indicates directionally we are going there. We are not yet there, and everything is a journey, really. But I think the good thing is that the trajectory show a very positive trend on the pricing, both on the loan side but also on the transaction side.
So you've talked about the role that the BOT can do to ensure that this journey is accelerated. The Tanzanians are able to access loans at reasonable interest rates. Why hasn't it happened yet sooner? What remains the one big challenge that is impeding this access to affordable interest rate loans possible in Tanzania setting?
I don't think that there's anything that has impeded, because I view everything as a journey. really. Even the countries that today can be said that they give loans at an affordable interest rate, they didn't do that overnight. It was a journey. Some of them took years to arrive there. So as I said, I think for me, I look at the trajectory. Where are we coming from? And where are we today? And where are we going? As I've said earlier, I see a trajectory that shows clearly that the intervention that have been done by the government, the central bank, and even banks themselves in terms of improvement on the cost to save is showing results, as I've said. It's showing results. And I think looking forward, if that continues, the direction that we will continue to see is not of rates going up, is the direction of continue to see rates going down, increasingly so, both on the loan side, but also on the charges. I think there is a number of circulars and intervention that the central bank themselves have done. Let me just give you a typical example of the system that BOT introduced the last few years, which is called TIPS, which is supposed to enable the interoperability of payment across the ecosystem. That has enabled transactional fees to go down significantly, maybe more than 50% less than how it was before the introduction of TIPS. So I think if you look at TIPS and how interoperable the payment system has become and how easier from mobile companies to banks and the pricing that banks are charging today vis-a-vis what they used to charge before the introduction of TIPS, you will see clearly, how those kind of interventions are working for Tanzanians in terms of bringing the cost of banking down. So as I said, it's a journey. It can come sooner going forward than how we are coming from. But I think just to answer your question, it's a journey, and I think we are moving in the right direction.
Okay, and I remember, again, one of my conversation with the BOT and also some other key players in the banking industry, I talked about the possibility of zero rating this interoperability when it comes to sending money through a platform such as TIPS. What are your thoughts on that? Is it possible for them to be zero rated? Because the perception has been that from a cost implication side, it's impossible. But when you talk to some key players within the financial sector, they say that if measures are put in place, it is possible to zero rate that, using such platforms. Is it possible?
No, I think I would not say it is impossible, because never say never, as I said. So as of now, where we are, as I said, there's a cost to save. Banks have incurred money to integrate their platform with the platform that BOT has created, which is a fantastic platform, which has enabled cost to come down. Can we do more to ensure that that cost continues to come down? Yes, I think there are plans that have been done. As I said, with increasing use and adoption of AI and other innovative solutions, we'll be able to bring it down. Is there a country that has done it globally to make it completely zero? Yes, they are, but depends on which kind of product we are talking about. So to answer your question more directly, it is possible, but I think it's a journey. Even where we are today, in terms of where we're coming, with what has been done so far by banks and BOT, has been able to bring that cost significantly down. And I think as we move forward with an improvement in financial inclusion, with volumes coming up, with more funding coming to the banking sector, without impeding, on the customer side, but also on the banking side, I think there's a possibility of doing that with more dialogue and engagement between stakeholders.
Okay, so we've talked about innovation, and we understand that Absa, you work with some of these fintech companies here in Tanzania and even beyond. But there is also the reality that fintech companies can be viewed as competitors to banks. And I have had dialogue with some of them who have a bit of a negative view on some of these big institutions, the telcos, the banking industry here in Tanzania, how you collaborate with fintechs. I want to hear from you, your perception on how Absa works with fintechs, and where do you draw the line between competition and collaboration?
Yeah, I think that's a nice one, Poki. I think that the idea of believing that fintech or MNOs and banks are competitors, in my view, is very outdated. Because I don't believe there is one single organization in one particular sector that can be able to solve for all the problems that our customers are experiencing, all the expectations and demand from our customer. So I think collaboration is key, partnership is key, because fintech on one side, they have their strength that banks don't have. And of course, banks also have their strength that fintech don't have. If you talk about fintech, these guys are very agile in terms of their speed to market. Their focus on innovation, I think, is quite aggressive. You can't compare. So they do have their strength, which is agility, speed to market, focused innovation, and execution. On the other side, in terms of banking, obviously, we have the scale. That's the strength that fintech don't have in terms of the size and everything. We have the capital to deploy in some of these projects as well. We do have that regulatory discipline that is sometimes lacking from a fintech perspective, but banks, we have been there and done that. There is that discipline. And of course, regulatory requirement also matters in terms of ensuring that your performance will be sustainable. So you bring all of this strength on one side from the fintech in terms of their agility, their speed, but their focused execution and innovation mindset. And then on the other side, you bring scale from banking, you bring capital, you bring governance, which is also quite important, and you bring regulatory discipline. You combine all of these two together, I think in my view, only the customer can be the winner.
Okay, absolutely.
Only the customer can be the winner. Because we in banking, we don't have the strength that fintech have, and they don't have the strength that we have. So I think if you complement all of these strengths together, and if partners are able to work together, and of course we've done that at Absa, realizing that we can't do it alone. We do not have the answer to all the problems that our customers are facing. And I think we are doing a lot of partnerships across the board, in terms of mobile lending, solutions that we provide, to insurance solutions that we provide, to a digital solution that we provide. It's all about partnership, and I don't think that we would have done it alone if we didn't consider collaboration as key and not as a competitive disadvantage.
Indeed. Now, further to financial inclusion, Absa has positioned supporting women entrepreneurs at the center of your growth strategy. What remains the biggest structural challenge that impedes their access to finances? I'm talking now beyond Absa, broadly speaking, because you have the experience within the local and financial sector. What remains that big structural impediment to women accessing financial services in Tanzania?
Yeah, I think this is a very topical issue that we've been covering quite lately. Yes, Tanzania, just like many other African countries, we continue to face structural gaps when it comes to women entrepreneur access to finance. And it's not only access to finance, really, because finance is one thing, but I think it's access to many other things that have been impacting women businesses. For instance, access to collateral. Because in banking, when you want to borrow, obviously you need to have a security. Yeah. Traditionally, we know, because of our traditional norms and beliefs and cultures, over the number of years, women, from an inheritance perspective, they've not been getting the fair share, in terms of that. So you find that they have business ideas, they're entrepreneurs, but they don't own properties, they don't own lands that would be used otherwise as a security. But I think they lack network as well, because in business you also need network, and they also lack connections, and market. So it's not only about financing; it's about connection, it's about network, it's about many other things that collateral as well, as I've said. So this has been structural gaps for women, and at Absa, obviously, we want to play a role, and we've been playing a role there in the last few years, which is why we crafted a dedicated solution for women entrepreneurs, which is called Absa She Account. It's an account on its own, which is zero from a transactional fee perspective. Women entrepreneurs are able to transact free of charge, realizing that cost is also another impediment to women entrepreneurs who have got micro, small businesses. So we wanted to make it absolutely affordable, but also being able to give them financing, at an affordable rate with partners, as I've said initially, who are able to, help us to mitigate the risk. Because as you know, women entrepreneurs, most of them lack the security or the collateral. So we have partnered with another organization that is helping to give us that mitigant so that we can be able to lend to women. But other than that, I think we connect them to other partners for them to be, educated from a financial literacy, business acumen, taxation, and the regulation as well around business and licensing and all of that. So it's a package that not only gives women financing or an account to operate, but also helps them from a support perspective to learn and have the connection, but also the market access. So what we've realized in Mpoki, the challenge that women face is not a capability issue. It's an access issue. Women have always been capable, over the years. But I think disadvantage has always come from access to finance, access to network, access to connection, and all of that have impacted women entrepreneurs' progress for a number of years, which of course we are trying to contribute to solve some of that. But let me just be honest. I don't think there's one organization that would claim they've been able to solve all of these problems. I think this is a continuing challenge that we all need to collaborate together, private sector, stakeholders, policymakers, government, and communities to ensure that we can empower women businesses, because women demographically, they form 50% of the population.
Yeah.
And if 50% of the economic potential of the country is not properly served from a financial inclusion perspective, then we all lose as a community, we all lose as a country, because that's a significant impact that it will have. So I think what we're trying to do at Absa is just to play our small way in terms of contributing to resolve that problem. But I think we are calling on other stakeholders to also do their part, and I'm sure they also do. But I don't think there's one organization that can claim that they've been able to resolve some of these issues.
I hear you on as far as that perspective is concerned, how you're supporting women access finances. But we understand traditional banks have been risk averse for a very long time. You tend not to provide or access to credit in areas, sectors that are deemed too risky. That includes women, youth, agriculture, and what have you. Now, the government has realized that, and part of the initiatives from a government level and how young Tanzanians can access credit, they're talking about possibly enabling them to use their certificates as collateral. You mentioned the issue of collateral. Yeah. Now, people have been questioning from a banking side, would you view a certificate, academic certificate of a young graduate as collateral enough value for you to extend credit to them? It hasn't been codified. It's not a policy yet. Yeah. It's just a conversation. But when you come to an institution as Absa, what is your view about that?
Yeah, I think Mpoki, it's a very interesting question in terms of using certificates as a collateral. I think what I would say is, first of all, before I answer that question, is we have been on a journey to alleviate some of these challenges of securitization to enable us to be able to save those segments, those sectors that traditionally have been viewed as more riskier. And one of the approach that we're using is partnership with organizations that are dedicated to support those kind of segments, working very closely with banks. One of them is AGF, African Guarantees Fund. Another one is PAS, which is a Tanzanian agricultural fund as well. So we are working with them. And I think what they do is, if we have a women entrepreneur or a youth or any other segment that ordinarily we would not be able to offer finance, they come in there. And of course, they give us some sort of guarantee that if anything goes wrong, we are here to make it good for the bank. And that has been working very well and enabled us to be able to save women and other group of entrepreneurs. But I think maybe more specific to your question, we are a regulated industry, and therefore some of the guidance and requirement around collateral and security, it's a matter of regulation. Can we use certificate as a collateral at one point in time? I wouldn't say never, but as of now, I think we don't have a regulatory framework that allows banks to consider that. As I've said, it's a matter of risk management as well. We have been given the trust by the depositors to hold their money, and it's the same money that we use to lend to other borrowers or businesses, whether they're women or any other. And therefore, I think we are required to be a little bit more responsible in terms of how we do that, guided by the regulation. So I think as of now, it's a very interesting thought, but I think we need to allow, the regulatory environment to evolve as well for us to get to that point.
So
but
at the moment, we don't have a conducive environment to enable such.
For certificates, I think, we don't have a policy, and I don't think there's a regulatory
the policy aside, is the environment conducive enough?
I think, we don't view security, first of all, as I said, security is the last resort that we look when we assess a creditworthiness of a customer. We look at the business strength first and foremost.
Yeah.
We assess it in terms of your cash flows and everything, your sector, your cash flow, your customers. That's the number one assessment that we do. If it's okay, it meets all the requirements of a banking lending framework. Obviously, for us, security is just a fallback position. We say if your business is good, but maybe because of unforeseen circumstances, things have not panned out the way they should have, then what is our fallback position? And then we look at the security. But I don't think security is the biggest problem, to be honest. And I will encourage women and youth and other entrepreneurs to really look at how their business model is and how strong it is, and processes and reporting requirement more than the collateral. Because for banks, collateral is not the number one thing that we look when somebody comes to a bank to look for credit.
Okay, and of course, from a practical side, this reminds me of an incident that happened recently, and we had our Prime Minister caution banks about some of the methods that are used to recoup NPLs. When you lend someone money and there's a collateral, be it a piece of land or title deed, and then you go and auction their belongings. What's your view on that? How can, because again, you're operating in a for-profit business, so you have to ensure that the NPLs are controlled. And then there need not be an overreach when it comes to state interference. But when the Prime Minister now raises concerns about some of the methods that banks use to recoup some of the credit that they've extended to their customers, how do you think, what position does that put you in, and how best can you manage to ensure that you still control your NPLs without resorting to auctioning all these other methods that are considered crude?
Yeah, I think, Mpoki, for us, the number one, approach or mechanism that we use to ensure that we do not find ourselves in a situation where we're dealing with a customer on a foreclosure process is our underwriting principles.
Yeah.
The credit framework itself, the policy around it, and how we go about analyzing or assessing whether a certain business is worthy of a credit or a loan from a bank. I think that's the number one priority, and we're a bit careful there. Yes, a bit conservative sometimes, but I think we would rather conduct a very careful process to ensure that when you loan to a certain business, then you are sure about the probability of that business being successful and servicing the loan. So I think that's the number one, like a control or mechanism that we use to avoid that kind of situation. But I fully understand and appreciate, the sentiments that are coming from the government in terms of some of these events that have happened. Quite unfortunate. I can assure you, Mpoki, I don't think there is a bank that enjoys, going through that kind of process with a customer. It is as painful to a bank in the same way that it is to a customer to have reached the point where a bank now goes after an asset to sell to be able to recoup a loan. So I think, what I know is that most banks would avoid that kind of an eventuality by, exploring a whole lot of options before they reach there, allowing customers time, restructuring the loans, and all of that. And I think if it has to reach to that point, there has to be a lot that has happened in between for a bank to have reached that level. But I think, as I said, banks use customer deposits to do lending. And these depositors expect that their money will always be safe. So if banks do lend out, and of course it happens unfortunately that loan turns into an NPL, there has to be a mechanism, which of course is as per the regulatory requirement as well, because all of these things are regulated in terms of the procedures that banks should go on to recovery. So you would always want to, do not want to lose that customer deposit that you have used to provide the loan. Because if you do that and you keep on losing money through NPL over time, it will not be sustainable. So we have to do responsible banking. We have to be responsible from a banking perspective. Customers also have to be responsible. But in an unfortunate event that a loan has turned bad, then obviously it is as painful to a bank as it to a customer to have reached a point where we need to do that. But I believe in most cases the bank must have exhausted all the mechanisms and options to ensure that they can recover that loan before going into a sale of an asset.
So as we're almost at the conclusion of our interview, I want us to look now at the banking industry performance. We've covered the industry quite at length as the citizen, and we often talk about the two-bank dominance within our industry, where we have two banks contributing almost over 80% when it comes to profitability. Now, within that setup, what role does Absa play, and what's your competitive advantage?
Yeah, of course. We appreciate, Mpoki, the contribution that every bank plays in this market in terms of the sector growth, but also the contribution that every bank plays in contributing to the economic growth and progress of Tanzania. I think for Absa, our view is not really to replicate, or sense not to replicate what other banks are doing, but I think is more to focus on what can we improve on, what can we focus on to ensure that we meaningfully differentiate ourselves and create value for our customers and our shareholders. I know scale is very important. You're talking about scale, which is the size of the two biggest banks, absolutely important. But I think every bank and every organization has its own niche. And for us, the main focus is with our resources that we have at the moment from a capital perspective and our technology and everything else, where can we mostly create value for our shareholders and for our customer? I still believe that there are so many other areas that we as Absa, if we focus on it, I think that momentum of performance that I've just highlighted with you will continue to be there. Number one, I think innovation is key. We will continue to be more innovative to ensure that we give customers what they expect, what they demand. I think we'll continue to focus on customer experience, and that will mean that we need to become more responsive to their needs. We need to be able to solution some of their queries or complaints sooner than later. We need to deepen the relationship that we have with our customers as well. We need to strengthen the resilience of this bank so that it can continue to be there and serve customers even for longer, the next 100 years and all of that. And I believe there's an opportunity for each and every player to continue to add value to our customers, and increasingly so. I think customers want a bank that is more responsive, has deeper relationship, more innovative, and I think there's still room for us as Absa to continue to improve on those key areas for us to maintain the momentum of performance that we've had in the last few years.
But then now, is this dominance healthy for the industry? And I'm asking this as someone who's also involved within the financial sector. We're looking at a scenario whereby the two dominant players can influence how the industry operates when it comes to policy influence, lobbying with the government. Is it healthy for an industry with over 40 banks operating, for two dominant banks to have such strength? What is your view about that? Is it a healthy setup?
I don't think this is a debate as to whether it's healthy or not. As I've said, I think every organization plays their own role in contributing to the Tanzanian economic development. These two banks have come a long way. I think we should be proud in terms of where they are now and what they do. Of course, as Absa, we continue to play our role as well. Whether it is healthy from a policy perspective, I believe the central bank is there, very well capable. I think they've demonstrated over the years that, they're capable to regulate the industry, to be able to achieve a significant performance that the industry has. And I think, the industry is insulated. I don't think there is any concern that from a policy or regulatory perspective, any one bank, big or small or mid-tier, will be able to influence a certain policy decision in the country. I think BOT has been mandated with that, and they're doing a fantastic job, I believe, without the influence of any player, bigger or smaller. And they'll continue to do that in the years to come.
Yeah, so as we conclude, what excites you about Tanzania's banking industry, and also what excites you about what Absa has in store for its customers in Tanzania and beyond?
I think let me talk about what excites me about Tanzania and not Tanzanian banking, because I always say that bank or the banking sector intermediate what happens in the broader economy.
Absolutely.
Banking don't do production, they don't do manufacturing, they just intermediate, in terms of the financial services. So what gives me confidence is it's really about Tanzania in general, because if the country continues to perform as it is today or even better, I think the banking sector will continue to replicate that kind of performance, because the performance of the banking sector is an indication on how the broader economy is performing. Okay, so I think what keeps me excited, number one, I think the demographic of the country, the market, the potential market that this demographic creates, very youngish population, 70 plus million and growing. That's a huge market, from a business perspective, and increasingly young and tech savvy. Now, when you have a demographic like that, which is young, tech savvy, and is increasing, I think that is very exciting for any business person, not only in banking, but across all sectors. I think the macro environment that continues to be very positive for Tanzania when you're talking about GDP growth, the way the inflation levels have been contained at a very low levels. If you look at the FX environment and the improvement that we have had in the last few years, and the stability really on the FX currency, if you look at the FX reserve of the country. So all of these macro indications that have been there in Tanzania in comparison with the rest of the other countries in Africa and regionally, it continues to be one of the best performing economies in Africa and in the region. So I think that also excites me quite a bit, because if that continues, and it can only get better from here, it means more opportunities for business and sectors to continue to perform well, but also more opportunity for banks to continue to support business across all sectors as well. So I think, if I can just put it across those two areas in terms of demographic, but also the macro environment that continues to be very positive for Tanzania.
Well, thank you, Mr. Obedi. We'll end on that note.
Thank you.
You were with me, Mpoki Thompson, for the Citizen Digital. We were with the Managing Director of Absa Bank Tanzania. We've talked about financial inclusion, profitability, innovation within the financial sector, and so much more. Until next time, that is a wrap.